Hey all, welcome to ShareTrack. This is Raj here, and I wanted to bring this very short, brief video to you because I'm really excited by looking at the news that came out of Microsoft and Google today, and of course also the news from United Parcel Service. I'm going to make a separate video on the wider ramifications for this, and you could probably see that tomorrow at 8 o'clock in the morning. But for right now, I would like to talk about something that I foresee because of all the positive news that have come from technology company results. So let's get started. Welcome back, friends. I'd like to take you to the cnbc.com website, and we'll take it from there, and then we'll go on to the TradingView platform. I want to show you a few things based on the latest results that have come from Microsoft and Google and what it means for our genomic companies. Here we are in CNBC. And you will see the headline here, Microsoft reports earnings beat, says AI will drive revenue growth. So this is very positive news. Alphabet reports revenue and earnings beat for first quarter. This is again a good news, and over and above that, Alphabet is saying that they're going to buy back stocks. They have a 70 billion share buyback. So that's also very positive news. And Google is cutting costs to manage through a weak online market. But overall, even their YouTube earnings and other earnings have been more or less online. So their earnings was 1.17 per share against expected 1.07. Revenue was 69.79 billion versus expected 68.9 billion. So better on both EPS as well as revenue counts. And in terms of YouTube advertising, they came in at 6.69 billion. That is 0.09 billion more than what was expected. And cloud revenue was 7.45 billion versus 7.49, slightly below out there. And traffic acquisition cost has gone down by 0.06 billion. So overall, I think it looks like a good performance out here. Alphabet's revenue rose 3% to 69.79 billion from 68 billion a year earlier, according to the earnings report. So these are all good news. Now let's go back and look at what Microsoft is saying out here. Top line, they're saying Microsoft surpassed expectations on the top and bottom lines and bet estimates on quarterly revenue guidance. Growth from Azure and other cloud services slowed 27% from 31% in the prior quarter, but was still faster than expected. So from that perspective, if you look at Google has done better in the cloud section. They have come slightly below, but they are not so much off the mark. And when it comes to Microsoft earnings, they came in at 2.45 per share, much strong and higher above the expectation of 2.23 per share. And when it comes to revenue, they have exceeded by more than $1.8 billion. So both very strong resounding results. And I think overall they are saying net income rose 9% to 18.3 billion or 2.45 per share, etc. So I feel that this is really good news, and I want to couple that along with another piece, a data point that we have out here. Let me just scroll down until I come to that. Google's cloud business turns profitable for the first time. That's okay. I'm looking for the UPS results. UPS shares fall after delivery giant reports disappointing earnings. So this is a harbinger of a drop in commerce and economy, which means that the inflation is likely to drop because demand is going down. Their EPS was 2.20 versus 2.21. Expected, and revenue was 22.93 versus 23.01 billion expected. So a miss on both counts. And they are saying change in consumer shopping behavior has led to increased spending on services and categories such as food and dining, rather than the kinds of goods that might be delivered by UPS. Now, before I draw a total conclusion saying that the economy is going down, I could also probably think that right now people are not in a lockdown, so they are probably going to the stores and buying stuff, and instead of getting it through UPS. So the earlier trend of shopping and comparison shopping online, finding what they want and what price, and then going to a particular place, physically looking at the product and then buying it. That's something that people used to do before. Maybe they're reverting back to that kind of a situation. Overall, I think when I take these three data points together, which is Microsoft earnings, Google earnings, and UPS. I think that the FDA is likely to be more dovish. And we also have a crisis coming up. GOP debt ceiling bill faces its first test as analysts warn. US faces default risk as early as June. So the problem with the US debt ceiling deal is threefold. One is McCarthy has got to get his own caucus in order and get an agreement on something, and that something has to be agreed to in negotiation with the Democrats, and there is going to be a lot of to and fro between McCarthy and the White House. But how effectively he is going to be able to control his caucus so that he can give a final say and ensure that the bill will pass. That's a big challenge because right now we don't have proof that McCarthy is an effective speaker. So that's a big problem. And that could also have an impact on the markets because if the debt ceiling is not raised, there are a couple of things that are going to happen. The first thing is that US is likely to be downgraded, so US bonds and all will be downgraded. The second thing that will happen is that the government will not be able to pay salaries to its employees, and that will have a direct impact on the entire economy because those employees, there are lots of employees who work for government and they won't be able to have money to spend. So that's going to be another big problem. So overall, with high interest rates, if that comes to that situation, people will have to default on their mortgages, on their credit card bills and all that stuff. So it's very messy. We rather not think about it. I hope that McCarthy and his colleagues are able to do a responsible negotiation with Biden, and Biden also doesn't push it too much and comes to some kind of an agreement. Then everything should look okay. So that's what I wanted to talk to you guys about, and I wanted to show you the TradingView platform as well. Let us go on to Microsoft, and you will see post-market Microsoft has gone up 8.47%. And friends, I'm really happy because I have Microsoft in my portfolio, as I mentioned. And then if I go to Google has gone up 1.14% post-market, but it had already fallen 2.03%. So it's not as great as I expected, but I'm hopeful that on tomorrow morning's trading, Google will also improve further, and that will definitely have an impact on FNGU, which has gone up 7.99. And friends, I have FNGU. So overall, I'm a happy camper out here, and this is going to have a positive impact on the overall market, and that includes our Genomic shares. Also, if there's a likely recession that's coming around, I've been thinking about this, and I just want you to follow my thought process and give me your feedbacks. I am thinking that when recession comes in, those companies will be affected whose products are being consumed by people, and therefore they consume less and they're willing to pay less, and those companies will suffer. But when you look at our genomic companies, they don't have a single product in the market. In fact, during recession, labor market becomes soft, and everything will be conducive for our genomic companies because they already have got the funds lined up and they are in the progress on with their pipeline. So while overall the economy might be in a recession, we can still have our genomic companies marching ahead with their research and development and going through the FDA approval cycle and getting ready to launch a product. It's only when the companies already have a product that a recession is likely to impact them. And now the second point I want to make is that when it comes to recession and impact on products, there are different types of products with different elasticities of demand. Elasticity of demand is how strongly the demand of a product reacts to a change in the price of the product. If there is a product whose demand drops sharply with a sharp increase in price, it has got a high elasticity of demand. So for example, if you increase the price by maybe $1, if a $10 item is increased in price by 50 cents and then the demand drops, the drop in demand is the elasticity that it demonstrates. However, if you have something like salt, for example, it's now costing $1 for a pound, and let us say the price goes up by 10 cents, $1.10, it's not going to reduce the demand of salt. Likewise, there are luxury goods which are in demand, especially when they are more expensive and more exclusive and very few people can afford. Those kind of products have got very low elasticity of demand. They don't respond to a increase in price the way the product with high elasticity of demands do. But when it comes to gene therapies, food, clothing, and shelter have got very low elasticity of demand. And when I talk about food, clothing, and shelter, I'm talking about the basics. I'm not talking about haute couture or designer clothes or designer homes. I'm talking about regular homes, basic food, and basic medicine. Those things will not respond badly when it comes to a recession. So, for example, Campbell soup might find increase in its demand. So those are the considerations that we have to keep in mind. Now, coming back to genomic stocks, I don't think our genomic stocks are going to suffer too much if there's a mild recession. In fact, there will be an oasis of calm and progress. So with that, my friends, I'd like to bring this video to an end. And if you like this video, please press a like out there. If you're not yet subscribed, please subscribe. And if you have not yet pressed the notify button, please press the notify button so that you get to know as soon as I drop a video. And if it's of your choice, you can watch it at the same moment or at a later time, but you will not miss any videos. Thanks and have a great day. Bye for now.